Good afternoon, everyone. Today is May 16th, 2010. This is Trading High Probability. We'll start off with looking at the spider, the SPY, and again on this period right here. This was that kicker that we called out back on May 4th. We said, okay, now that we saw this inside two, okay, these two bars right here. And then we said, okay, this looks like this could be the top because of this inside two with this bar here. This confirms it. Anything breaks down below this, we're going to have some kind of correction. But sure enough, we had this kicker right there that formed, and we said, you know what? With this kicker forming right here, that's it. This was the top of the market. We should not see any price retracement back above this level here, above the kicker on the day before. And sure enough, what happened was, it continued down. Of course, we know what happened last Thursday, or almost the fourth, the fifth, sixth or so, and then Friday we had bounced right back. That was that 1,000-point day, and everything came right back up. And where are we now? We all of a sudden hit that 50-day. This blue line is the 50-day moving average. We also drew out the Fibonacci from this point to this point right here. This was our 61.8 Fibonacci level, and we told everyone that as an idea to short into that 50 or that 20 period moving average. This is our 20 period, this purple line right here, and which we did again. So not only did we take profits down here from this kicker, we also went ahead, jumped on board, and we went ahead and we said, okay, it should fill the gap. Now there's two gaps to look at. There's this gap right here, which is the top of last Friday's bar between last Friday and last Monday's bar. This was the gap that was produced. There's also another gap right down here. We came within 20 cents in filling this gap on Friday. We didn't quite fill it, so now we still have a gap down here to fill, which is the close, and we have this gap right here between Thursday and Friday. So which will we fill first? You don't know. I'm hoping that it pops back up, fills this gap, take it short again, place your stops above that 61.8, and let it just come on down. That would be the perfect scenario in our eyes. That's what we're looking for. I mean, right now we're also seeing that there's no divergences. It can go either direction. We're always looking for divergences, but this right here is producing a lot of resistance. You got the 20, you got the 50 moving period averages, and you can pretty much take a look at any. Here, we'll pull up the Qs for instance. And here's the Qs, same scenario. It's right into the 50, right into the 20 period. Same thing going on. Here's the kicker that formed. We can even go back in time and just take a look just to see how we did back in 2007 with that kicker scenario. And as we go back, let's see, here we go. And you can see that the high was really made back here. This is back in October 31st, but that kicker didn't really form until January 4th of 2008. But the spider, if we pull up the spider for the same period of time, that kicker showed its head on November 1st on the spider. And sure enough, it came down, and nothing comes down in a straight line. It pops back up, and sure enough, what did it do? It started falling apart thereafter. So this 50 period moving average will act as support. It might hit it once, maybe twice, and then you'll start seeing a dramatic fall if we do resume the bear market, which we think we're in a bear camp still. We don't think we're out of the recession, and that's just our opinion. Catching back up today, looking at the spider or even the DIA, because of these, we typically look for divergences. And in fact, let me just squeeze this chart here a little bit. I'll show you our MACDs as it comes into play. You could see that we have a higher low on the MACD. We also have a higher low on the price. So there's nothing diverging right now. We typically will look for divergences, and right now, because of this huge down sign, we had a 250 point I think down day on Friday. Ended up minus 162 on the Dow or thereabouts. When that happens, it's pretty hard to find divergences. So this might take another day or two to find some setups. We're probably looking Tuesday, Wednesday at best before we start, get into the swing of things again and and finding our trades. But like we always say, be patient, sit on your hands. There's nothing wrong with letting the market, whip around a little bit. But as you see volatility picking up, this is exactly what happened back in 2007 when everyone says, "Oh, it's just a little correction. Don't worry about it. Now's the time to buy." You know what? If you're that brave soul, go ahead. But we see other things on the horizon, especially with the European credit markets and everything else that's going on in the world. People are looking for jobs. They say that the rise in unemployment is a good thing, because more people are coming out of the woodworks and looking for jobs, but they're not finding them. So come on, people. I don't know what the government's thinking, but that's another point. Anyhow, um, otherwise, just we got the 50 here. This should bounce one more time up to the 50 or thereabouts, and this will start rolling over. This 135 moving average in yellow, as you see, this is acting as some kind of support. Yeah, we could come back down here, but I don't know if we're going to continue down that hard in this exact drop off. We've had some good reports as far as some companies making some money, but really and truly, I don't think you can get it any worse than it was last year, comparing year over year profits, or should we say less of a loss. In fact, it was just on the news last week that foreclosures are down. Well, you want to know why foreclosures are down? It's because the banks can't keep up with it. They don't want the properties anymore. So that's part of the reason that the foreclosures are down. There's just a ton of them out there. Things are getting worse. People aren't finding jobs. But that's not what we're really focused on. We're really focused on the charting. Our main focus is charts. So looking at the charts again, right now we don't see any special pattern, whether it's the Dow, the Spider, the Qs. Right now we could trade in. I think we're going to fill this gap Monday or Tuesday to the upside. I could be wrong, but I don't see why not. We might see a little pop down Monday morning. Don't be surprised, and then all of a sudden right back up. I know we went short on the Qs, thinking we're going to at least get down here to fill this gap. We came pretty close Friday. I still think we're going to come down lower. If this does pop back up in this area here, let me just draw this out. We're going to jump on board, whether it's anywhere from here to this area here, filling that gap from below. We'll jump on board and take some more shares and ride it down. And our stop is still above, the kicker into that previous period.